All right, good morning, everyone. It is 8:20 on the morning of February 10th, 2023, and this is my pre-market strategy session. And so before I get started into the video, there's something I want to show you, and that's the 10-year, 2-year. Oh, look, it did it. It finally did it. Okay, within the past just couple of minutes. This is okay. This is funny. All right. So within the past couple of minutes, the bottom of the bar was down here at negative zero point 0.9, right? And this is funny, when I sat down to prepare this video, the gap, the bottom of this candle right here. Well, let me just show you. And it was just a matter of minutes ago that it looked like this. So I took a screenshot this morning. Let me get over to the timestamp so you can see it. At 6:18 this morning, I took a screenshot. You can see 2:10, 2:23, 6:18 in the morning. I took a screenshot because every time I would come in early in the morning, there was like this really big candle down. It would disappear by the time I sat down to start doing my morning report. So here it was at 6:18 this morning at 0.9, negative zero point 0.9. And now here I come in and here it is, it's 8:21 in the morning. So roughly 2 hours later, and there's a completely different candle here. It's very strange, very, very strange. Not really sure what to make of that, but at least now, the prior two times that this happened, I didn't take a screenshot of it, and so I had no proof. So I just had to say, "Hey, look, this was the low that I saw when I came to my desk." Now, here it is. Finally, I get to capture it and put it on a video. Okay, so now on with the video. So today, the title of the video is "The QQQ Gap Filled. The Next CPI Report Looms." Let's go over here to the Qs, and actually, let me leave it there. You can see. Yesterday, right here. Actually, you know what? I've got a horizontal ray on it already. Right, yep, right there. So here was the bottom of the gap. The gap occurred between February 1st and February 2nd, there was about a $7 gap between these two parts right here, and the market came down yesterday and broke just below that gap, and then popped its head back up again before the close. Now, if we open up where we are right now, we open up below the bottom of the gap. All right, and it's working on oversold. So on the 10-minute here, conditions are oversold. Now, volume is very light in the pre-market. So pre-market relative strength, it can be a pretty good indicator for which direction things are going to go at the open. For example, yesterday, you can see here prior to the open. I'll make this. Let's see if I can get it. There we go. This was prior to yesterday's open. It was overbought, and this is also true. I'll just go ahead and show you here. It's also true on the 1 minute. It was in overbought territory on the 1 minute just before the open. And then also that coincided with the VIX yesterday morning being oversold. Let's see, where were we? For 9th, 10th, the 9th. Where? At the open. Here it is, right there at the open. So, it touched off, the VIX touched off the bottom of the relative strength index there and took off. I didn't take that trade. In fact, I didn't make a trade at all yesterday, and I was left behind. I was expecting the Qs to come down and close this gap. I just didn't think it would do it all in one day on one $9 move practically, and it was actually quite a rather picture perfect day. So here's the upper level of resistance that I have. It's at 309.62, and opened up and just kind of just leaked down for the rest of the day until it hit the gap. And then right there at the end of the day, It went below the gap and then was, there were people who were taking profits maybe, I don't know, but right there at the gap was definitely a decent price target. I didn't jump in. I sat on my hands all day yesterday. I watched it in the morning, didn't take a trade, and then came back in the afternoon and didn't take a trade. I was just, I didn't feel like going against my my bullish bias. I didn't feel like being contrarian to my bias. And sometimes zero is definitely better than negative. And I was looking for I was looking for a bullish setup, and it didn't come along. You can see here the relative strength index didn't start to curl back up until the very last few minutes of the day here, and so there was no entry for me. So that's where it goes sometimes. And so now here we are, and this is the area that I want the Qs to be in order to start accumulating. So we have this blue line right here is the 14th, the Tuesday, the 14th of next week, which is Valentine's Day, which is when the next CPI report comes out. And apparently, the CPI report is going to show anywhere between 0.4 and 0.5% a month-over-month increase. So we're going to get a CPI report that isn't in line with the favorable trend, right? So what do I think happens? I think that the next couple of days, it kind of bounces back and forth in between this range right here, and then when the CPI report comes out, we do one of two things, which is fail miserably. Get that out of the way a little bit. We either fail miserably or we take off like a rocket ship after Tuesday. So I will be setting myself up for some options as price sort of bounces around in this area right here. And what I plan on doing is I'll probably get into a straddle and buy calls down here. And I'm looking at probably 2 months out, and I'll buy puts up here throughout the next couple of days, and actually between Friday and Monday. And the idea there is that if there is a significant break in either direction, then the movement in the options that I have on, whether if they're puts that I buy here or they're calls that I buy here, the significance in the movement of the direction will put me into a profitable position. And that's my strategy for right now. This morning, if we get up to, if in the morning here, the morning session stays over, we're oversold, and we pop up to this 301 area right here this morning, I'm buying puts. If we leak down to this 294 area over here, I'm buying calls. And that's my strategy for today and for Monday, for that matter. And then we'll see what happens on Tuesday morning at 8:30 after the CPI report comes out. What else is going on? Okay, so there's the 10-year, 2-year. I cover this every morning, and it is, it's in record territory over the past 40 years. Now, I saw some data that goes a little bit further back than what I have, and apparently back here in the 80s, there was a little bit more volatility here. So this part of my chart back here, this data may not be correct. Apparently, we have gone lower. The yield curve inversion has been deeper than 0.9. But for right now, with the data that I have, we are certainly inverted, and certainly when this inversion corrects itself and normalizes, and the 10-2, the 10-year yields more than the 2-year, and so on and so on, that's when we see the crash. So we are setting up, the longer and deeper down it goes, apparently the worse the recession will be. Yeah, I mean, this is all set up to fool people, though. Just because it happened here and happened here, I don't know. I get this funny feeling that when we normalize, everybody's going to be expecting such bearish action that it's actually going to turn out to be bullish. Sounds weird, but I mean that's kind of the way it goes, So I'll just trade the chart that's in front of me. And for the time being, I am looking to get into a swing trade on straddles between these two inside of this price range right here between $294 and basically $294 and $301 right in this area is where I will be looking to pick up puts and calls. All right. That's really basically my strategy in a nutshell for the next probably, week or two. That's about it. The dollar's trying to put in a bull flag here. I doubt that's what's going on. I think this is just another up move and longer downtrend, a long-term downtrend. Let's see, Bitcoin. So Bitcoin really started rolling over yesterday. I have a crossover between the neckline and a price support level that occurs. Let's see, it's going to be roughly somewhere between Thursday the 16th and Friday the 17th. That's one hell of a steep decline. Bitcoin has definitely found some support here. It'll be interesting to see what happens. If CPI comes in hotter and the Fed, is going to have to tighten more than up to 5.5 or what have you, then the things are going to crash. Personally, I don't think that is what's going to happen. I think that we're going to get a puppies and rainbows, but puppy dogs and rainbows reading on CPI coming on Tuesday, and then if need be, the revision of this month's CPI next month will make it higher. I'm just kind of guessing that the Bureau of Labor Statistics is going to make it easy on Powell by, who knows, fudging the numbers somehow. I'm still bullish. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you on Monday morning's strategy session. Have a great weekend, everyone. Thanks for tuning in. I am out.